Hi, good morning, good day, wherever you are. This is our global webinar series, real-time daily trading ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Friday, 11th of January 2019. Let's start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to the complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you are in the European Union, you will still like to read and know more about the retail clients, professional clients, different offers. One of the topic of the year 2018, maybe still for 2019, you will also find the information on our web page. Sometimes a picture shows more than 1,000 words. The margin requirements could be quite different. 2 prominent examples, DAX 30 and euro dollar. Margin requirements between retail clients, professional clients, like you can see, a big difference. If you're a professional trader and you like to get the professional client status, if you are eligible and you met the criteria, you can apply for it online. Retail clients still have a big benefit. It's called unlimited protection against negative balances. Professional clients don't get a vehicle regulation. But some brokers and of course also Admiral Markets offer something additional. Also professional clients get a protection up to 50,000 British pounds according to our policy. All details how to apply for it, like you can see online, here's a specific link. This is me, my name is Jens. I'm the German guy from Admiral Markets, so my English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday it's Jay's day, on Tuesday it's Paul's day, on Wednesday it's Giancarlo's day, on Thursday it's Marco's day, and like today on Friday it's Dirk's day, our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you'll get many benefits only with us. DAX 30, triple split of just 0.8 points, euro dollar, 0.6 pips typical, and many, many more. All details you will find, for example, on admiralmarkets.com. One World, global offers. Yes, we have an office in Chile. Yes, we have offices in European Union. And yes, we have an office in Australia. The choice is yours. If you'd like to learn more about our global offers, just go online and you will find information on our web pages. Enough from my side. Now it's time for Dirk. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. Hopefully you had a great start into the year 2019. Of course, happy belated Happy New Year 2019 for you guys out there. And of course, we are starting to browse. Let's say to browse through the first week, first fully trading week, and check out a couple of setups possibly. Before we get into a couple of details, just going back to the last webinar, nothing about cheerleading, about telling you guys how perfect setups have been. No, simply to say because some technical setups went 100% perfect. We spoke about Brent and oil in direction to this 61.8 level here last time, and we drawed the so-called trading box where the oil is possibly turning around, and really exactly around this place, around this spot, the price of oil went back up the road in direction way over the 60s a barrel. We spoke about Euro NOK as well, where I told you guys that we might scratch this last high here and to take out a couple of stops right around this level here, and to possibly think about a new short setup way up the road here. And we spoke about US dollar Canadian, so the so-called loonie, and we draw that blue trading box here as well, where we told you guys about something like a short setup in between. Right now, as you can see, I wrote that one here into the text box, a move of 400 to 500 pips, depends where you entered this one. And you see the green arrow right here. So that's another 61 level from the short-term analysis, so-called Fibonacci analysis in short terms. It went down from the 61 long-term to 61 right now at the short-term, and might be something like a turnaround move back up a little bit here. Just in case, just to reduce a couple of this oversold territory, which the loonie already reached in a couple of time frames. Bund, we will skip that one. Hovering around 61 right now. Might be interesting to get a new short setup soon. And of course, looking at the German DAX as well, and just checking out a couple of levels right now before we get to a position in gold, which we talked about a couple of weeks and months again and again and again for long setups. Okay, check out this current, let's say, daily chart setup from DAX. There is nothing very 100% special besides the fact that we are still in bear market territory. If you look at the, let's say, daily candles right here, you only see one important spot for the next days or weeks to come. And might be zooming into that one because I'm talking about a so-called gap. You see that, and you might use these so-called shapes and just to draw a line until it comes into your direction of today. So we will have an interesting level to move into a new short setup is the low of 11,146 right here. If you check that out at the XetraDAX levels, you will see a couple of gaps there. Let's just draw that board right here. There are a couple of XetraDAX gaps from December. And this was the moment where I spoke about the DAX looks like a Swiss cheese because there are a couple of holes in there. So these holes are so-called gaps. And as you can see, 3 of them are not visible in the future DAX chart. Of course, different kinds of points and different kinds of trading hours, and of course a total different base. If you look at the future DAX, the current DAX, March 19, you got one gap between the 5th and the 6th of December. So as you can see, 11,167, 11,077.50. So 11,077.50 is the lower band, and 11,167 is the upper band, and this is the gap close. So this is the current interesting level where the DAX, in case of the future DAX, of course, and the XetraDAX as well later on, might need to move up to close that gap. If you look at level at the XetraDAX is 11,177. So if you're looking for pending orders, or if you're looking for pending shorts, you might be typing in levels like 11,170 just in the middle of that one to be a little bit more on the 100% perfect side for a next short setup. And of course, don't overdo it. It's the beginning of the year. Don't crash too much. You got to be watching out that liquidity is coming in and coming back in more and more the more days to come. And even, of course, next week, earnings season is about to start. It's getting more bumpy out there. This is a so-called keyword, earnings season. And if you look at the next, let's say, events to come, or the next interesting events to come, besides that we have earnings season in the US, which affects, of course, the German DAX as well, because when the US markets are going down, the DAX won't be going up. Let's check that out if there are some interesting Fibonacci, say, resistances and Fibonacci supports. And you can see that one. The next one is the 38.2 on the longer side. So that's from the record high. Excuse me, not from the record high. Got to be taking the right spot. Sorry. That is the record high. And the record high from the beginning of 2018 to this 2018 low. And then you got to see the first bigger resistance from that Fibonacci analysis, from that long-term Fibonacci analysis. That's the 23.6, which is quite close to this open gap here. That's quite close to the lower band of this gap, right? And the next one would be way up in direction 11,500. So way to go there. First of all, interesting level would be this close of the gap for the bulls. Next level to the downside, still the old year's low at 11,279.20 for XetraDAX. Looking at a couple of data here, resistances and supports. If you see that one, the next resistance here is 11,970. and the next resistance up there is 11,018. Of course, you got to use the same stuff here. If you check that out at the navigator and check out this Admiral pivot, and you enter that pivot points into the system, then you will find the next resistance, for example, here, resistance to 11,091, and the next one, 11,210, right here. So that is way up and after the gap close here. So there are a couple of indications, a couple of signals giving you a little bit of a hint that this gap is between the R2 and R3, and of course around that longer term 23.6 Fibonacci. So it might be interesting to catch this, let's say, trading box here to the downside if it reaches up there. Okay, next thing to come, we're going to speak about, first of all, looking at the market watch. I'm going to speak about that euro-US dollar, because the last moves of the last days or weeks are still, let's say, a little bit of a range. So we are still range bound here. We're going to try that with a shape as well. And the low from 2018 is 112.15, and going up to that 115 level, which really busted up here, and we went up above that one. And the next target from a chart technical aspects here from the so-called candles would be 118.15. So that's the point where it could be spiking up there, just in case something is really badly going wrong with all this talk about shutdown and state of emergency plans from the US president, and whatever the fact may be, yes, let's say, bumping around in the press and the media the next days and weeks to come. That is the keyword. We just spoke about that shutdown scenario. And you got to be sure you will find a lot of stuff about that shutdown written in the media right now. And they spoke about that President Trump possibly is calling out the state of emergency for the whole country, just because of the reason that he doesn't get his wall funded. And interesting stuff, because the government is shut down, is because a lot of those, let's say, government appropriation bills that are funding the US government, they are not covered. So from 12, there are 7 not covered. You can be sure that defense is covered. You can be sure that labor education is funded, and military construction, all this stuff is funded, energy and water. What is not funded is commerce, justice, science, homeland security, and stuff like that, and a couple of state foreign operations and stuff like that. So what does it mean for us traders? That means that, for example, on Monday, possibly a couple of industry data or a couple of economic data won't be released because, why? Because all these guys are sent into holidays or forced to stay at home because they are not getting paid. So we are in a bad situation, like even the Federal Reserve, because we don't get brand new data. And without brand new data, something is going wrong out there. So that's a fact right now. Looking at, we'll be closing that one here. Looking at the longer term setups, just looking for next weeks and month to come, what is possibly, in which kind of directions the euro-US dollar rate could be. So we still have that year's high at 125.56. We got this year's low from 2018, and that's the reason we got a couple of interesting levels, and we will mark them with the so-called shapes here as well. We got the 23.6 already scratched here. You can see that. That's the one. And we got the next setup for, let's say short entry possibly at the 38.2. And the way up, you see that yourself on the Fibonacci retracements here in direction 61, which is around 120.55, 120.50s. Interesting level for let's say for next longer term shorts. I'm speaking about short setups all the time. You may ask yourself why. You may ask yourself, why is he not going long somewhere? Because there's still the interest rate differentials between the euro-US dollar. So the euro is still at 0, and the US dollar is right now at the target rate of 225 to 50. It might be changing. And if you guys check out Fed projections, or a so-called Federal Reserve, the Fed watch tool, FOMC watch tool, you will find yourself that Federal Reserve projections are going back, and you will find yourself that probabilities of next rate hikes are really disappearing. And if you look really until December 19 or January 2020, you will find a couple of indications, probabilities, that they really say that 22% probability of even a reducing rate, so that the target rate might be going down to 25 basis points. So that is something like really a turnaround for the Fed policy. So that could hurt. But at the other side, you got the euro and the ECB as well. Nothing is perfect here in Euroland. So we still have the same problems. We still have the same issues. And that's why it's, let's say, it's like a game. It's like a game, like a football game, a soccer game, whatever you may call it. It's really, it's 1 equals 1. So we have the same problems like the US, and the US has the same problems like us. We are in the so-called, let's say, neutral zone. So all we can do is waiting on spikes and sudden events where the US dollar is going up the road, and that's an invitation for us to go short again. Speaking about liquidity, let's just check out the market watch and just show all and have a look at one currency pair which was badly affected in the first days of the year. Just explaining you guys what is going on and why most of the pros simply stay aside or stay in holidays or don't trade anything because of low liquidity. And you see this really dramatic needle here in the US dollar versus the yen. So the yen really got strong in that beginning of the year due to the fact of really thin liquidity. So what is going on? It is not only the currency pair, the US dollar versus the yen, of course, but movements like this one here can shred your pips and can shred your account in a couple of seconds or minutes to come. And this would be, or this is, a dramatic start into the new year. So most of the time it is, yeah, let's say, quite smart to stay aside the first days or the last days of the year, and just to be a little bit more patient and wait for the first fully trade week, or let's see, like we do it here, what is going on in the first week of the year, and then later on try to step into the market with the first positions. So if you look at a couple of Asian currency pairs, you will see the same stuff here, like this US dollar versus the yen. And it bounced back. So you see a couple of hundreds of points simply bounced back during the day. Okay. Going to check out the gold trade. Closing that one here first. Right, and closing that one here and going to that gold weekly chart. We spoke about gold setups a couple of weeks, long time ago, all the time, and we spoke about the so-called bull case. The so-called bull case is just the reason, and has been the reason, and is still the reason until this shutdown stuff and debt ceiling stuff is not solved. And as long as it is not solved, it might be another, let's say, a rocket burner for the gold price, even, of course, for other precious metals like silver. But first of all, gold will be scratching the ceiling again at 1,298. You see that old high here. Let's see if that is the way to go. Let's see that one on the daily. So the daily tells you that's 1,298.51. And if you go back to a couple of older levels, you will see the high. I might simply do that a little bit more smart and just open a new one, because there are too many lines there, confusing. and open this year chart. So you see that daily year chart, and we will draw that Fibonacci levels from the high at 1366 down to this low. The low was 1160, and let's do that 100% perfect here. What is going on? Okay, and now you see that we have a nice 61.8 Fibonacci level. Again and again, this 61.8 level is something like Groundhog's Day. It's coming up every time when the market is possibly turning around or getting some trouble as a resistance, a broader resistance. And that's right now, that's a fact. A couple of days here, the 61.8 level has been something like a resistance, and right now it should be working as a support, because we are already above that one. And if you check out the shape here, this would be something like a blue trading box, a so-called buy box to the upside. So target for the next bull run possibly is at 1,315. And if you check that out, last highs here, you will see, where is it? You will see the next possibly target rate is here 1325, and of course the old high 1366.15. So that's just in case that this shutdown stuff, debt ceiling talk, and state of emergency talk, whatever the fact is going on in Washington, will remain. Okay, I spoke a lot, Jens. Possibly there are some special markets clients are wishing for, or some questions or something.
Yes, maybe some market wishes from some participants we should take a look on. Gold is already on your screen, and Bitcoin is also a topic. BTCUSD, please.
Okay. Okay, I told you guys about Bitcoin. Okay, let's just have a look. If I will find Bitcoin, because that's not usually on my list. All I can do is, of course, just drawing some chart technical aspects into that one here. So if you just way back to this crazy spike, and you will find just setups from the Fibonacci's, and if you check that levels, you will see the records down to this current low. So we still have a possibility to build this. So you see what crazy moves should be going on to the upside, of course, in direction 6,500. We'll mark it directly where the bigger picture is. 6,970. Okay, and we'll do the same stuff to the downside here as well, and we'll be going back to short-term scenarios, checking out those levels from the last low, and going back to this high. Let's just check out if we are completely correct here. This is 3116.40, 3104. Okay, so this is the low, and this is the high, and you will be seeing levels like we are already testing those ones as 61.8 Fibonacci level here again. So that's 533, 3620s. And the projections to the downside, if you see these as well here, are 138.2 level and 161.8 level. So of course, I'm not speaking all too much about fundamentals about BTC versus US dollar, or about the so-called Bitcoin, just because I'm not trading it. I'm not interested in Bitcoin. That's the one and only reason I can't tell you too much about fundamentals. If you like to check out a couple of fundamentals about Bitcoin as well, you might find even some data and some reports and some let's say research stuff at the CFTC, so that's the Commodities Futures and Trading Commission from the US. Might be interesting for you guys as well. You will find that at the website of the Commodities Futures Trading Commission, so www.cftc.com or .gov. I think .gov, and you might find it directly on the first page in direction commodities, and of course Why commodities? Because Bitcoin is, let's say, dropped into the box of commodities, even at CME. And CME Group might give you a hint as well to a couple of Bitcoin research stuff and about facts, about margin requirements, because you can trade the Bitcoin as a future via the CME Group. Okay. Yeah, Jens, that's the one thing I can tell you guys about Bitcoin.
So time is our limit. Like every day, it's already 26 minutes we are speaking here. Thanks for today. Tomorrow is another day, but tomorrow is already weekend. So already to the early hour now, have a happy weekend. Next week, we will have one of the hottest market events of the year 2019, I guess. The UK Parliament will vote about the Brexit. Everything can happen. Rate gaps, everything. So we sent out yesterday and today already information and company news on our web pages that the professional clients with a higher leverage option will have some margin adjustments to this event. Just make sure you get the email if you are trading with us, and make sure that you are prepared for this hot market event. Everything is possible. Hugest gaps ever. Everything is possible. So next week we'll talk more about that, but maybe already now prepare for it. If you have open positions, also they will be affected if you're a professional client at Admiral Markets. All details on our webpage or on his email, or call your customer support and we will be happy to help you. Greetings from Berlin office. Thanks a lot. Thanks to Dirk, and all the time, best trades.
Yeah, happy trades, and of course, not very far away. TGF, thanks God, it's Friday. Have a happy weekend. Have a blast. Have a party. Thank you. Bye bye.